Let's get rolling. Let's get down to business. We're going to go today's trade recap. Break even trade today. And we're going to go down. And we're going to go down apparently. Fucking close this, mate. Oh my god. Right. What actually happened, mate? I was in a 10 minute 52-second trade from near the 9:30 open, and if I'm a bit all over the place, I've just been working overtime, and I've only just got home now, well, like 20 minutes ago, as you can see, fucking 8 o'clock. Right, the trade itself, let's have a look. So we went with the 8 a.m. break and retest today. Went iron up the trade. Oh damn, that actually would have banged. What the fuck? Oh, never mind. Well, yeah, so when I iron up the trade, I was looking at the S&P initially. Last night I watched another video just to expand my knowledge on this model, and there's also other areas where you can trade from, being untested highs and untested lows for bounces and retests. Bounces and rejections, as you can see, this is the rejection portion of that model. And yeah, basically I was looking at these highs possibly being targets, buy side targets, obviously. And then, we drew out the 15-minute 8 a.m. candle. There you go. Started implementing the magnet tool just to make sure it's completely accurate whenever I do it. On here, we didn't have untested highs, but we did have a 5-minute fair value gap there. And Nasdaq basically just hit the midpoint first compared to the S&P, which kind of stalled around the previous daily high. Noting that there was this 15-minute fair value gap below in the London session. Another fair value gap below in the London session. Untested low here. So I'll be looking for a bounce off that sort of level. But yeah, went with the break and retest today. So what we're looking for, initially, we had unemployment claims news, which came in, I think, bullish today. And, fuck off. So the initial move was up from the 8:15 candle. We traded back down into the midpoint at 9:38 to then fully tap the midpoint at 9:51. Not unfortunately, I waited a little bit for this candle closure here, and then this held here, and then I went long there, targeting. Come on, mate. Where's the money? 1.9 to 1. After that entry, if it had been from the midpoint, it would have been 2.8 to 1. And so we had to stop 25,709, 25,639. So it's about 60 points. No, it's about 70 points. You do the maths. It was 70 points. Maybe it was 69 points. No, it was 70 points, right? So from here, we got this nice push up, and then price created an inverse fair value gap. What the fuck? On the, what's it, the 5-minute? Yeah, 5-minute inverse here, and then traded around this sort of level for a little while. I was looking at that in combination with, the S&P was lagging behind a bit, so I was mainly looking at Nasdaq. And so from here, price then traded up. I put my break-even point at the top of this candle, and I wanted to see this trade run. After I marked out this fair value gap, I was also considering just taking profits there. So if we let this go, we put, what the fuck, why does it look like this? They updated that. That's weird. What? Why is it in? What the fuck? I think they've updated that. Weird. Okay. Um, so yeah, that was the trade there. 297 TP, 155 stop. You know, we would have taken like 270, 280 if that had gone all the way up. Um, and the reason I was bullish was because we broke upwards and came back down to the midpoint. That was it. So from this wick, we were running about £145 profit, and then price gradually started trading down. And because I was at break even, I got stopped out for £4.26 profit. Ooh, 19 pips there. So break even, mate. Nothing to complain about. You know, ultimately, if I was looking at what the risk to reward would have been from moving my stop to break even, and also the actual break even line. Hold up. What the fuck? Mate, let's not take the piss here. Yeah, so if we were looking at this. All right, because it's literally covering it for whatever reason. It's been weird. Anyway, we'll ignore that. It would have been a good risk to reward, and you know, I could have taken profits there. Ideally, I should have taken partials. But even still, if I took a partial, if I closed one unit of the three, it would have been like 35 quid. So it's not really too big of a deal. And then yeah, price kind of just kept tapping this midpoint, traded up and broke down, and then yeah, from there we've traded down in the PM session. So very simple trade today. As you can see, I wrote these notes. Felt comfortable in the trade. Bit of a late entry off the midpoint. Stop loss to break even at the line. Held for full TP and followed the plan. Price could still go up to TP, but I'm not chasing. Break even and done for the day. And yeah, it's just interesting to see this. I'm noting this because this is my first day actually like looking at the rejection and the bounces and stuff as part of this model. It's pretty similar. It's basically you look for price to hold. Say if you're looking at the rejection untested high, looking for price to hold below that untested high, reaction down, retrace, and entering off that. And with this, the entry criteria is a bit different. So whereas on the break and retest, you're looking at 5 or 6 points. On the Nasdaq, it'll be 50 or 60 points to target 150. On here, we're looking at 10 points on the stop or 100 points on the Nasdaq. So same sort of risk to reward. Three to four risk to reward is what you want to be going for ideally if you get the entry absolutely spot on. And yeah, as you can see, that would have come down and taken profit in the PM session. So can I change that to risk? Can I? I'm gonna have a look at this afterwards because I don't know why it's changed. Used to be able to do it on just fucking ball like that. Let's say 3 units. No, 2 units. 2.9 risk to reward, risk to balance. Oh, here we go. Hold on. No. Well, that is not great. But if I can do, like, say, 3%, 3 units. So if I wanted to do exactly like what, 2.6%, still does 3 units. So it's not exactly correct. Anyway, I'll have a look at that afterwards. Yeah, I don't know. They've updated this. I'll see what's going on. But yeah, say for example, if we wanted to do percentage balance, 2%, 2% risk. What the fuck is going on? Risk percent balance. There you go. 2%, 17 units. Keep it on that. That would have been a nice 363 quid there as well. So interesting to note. Very interesting to note. And yeah, that's me done for the week. On the week, I am down 80 something. Current week, £87.90. There you go. So yeah, we'll just come back next week. We'll be fine. See how we go. And yeah. So we got the turtle soup here as well. You know, low high, fair value gap, bang, down. Anything else? Anything else? What about the Dow? Wasn't looking at a Dow. Let's forget about it. Yes, the turtle soup came here. There was the fair value gap compared to up here or up here. Easy peasy. So with that being said, I will catch you tomorrow. Trade smart, trade safe, trade your bloody plan, and don't be a fucking donut.